We're live.
Oh
Welcome
God.
to Grace. I'm so sorry. I'm like, yeah, I'm always like in shock mode at all times. And I click on uh going live. But yeah. How are you today, John?
I'm doing great. It's we've had really nice weather here this summer in Wisconsin where I live, and
You live in Wisconsin?
I do. I live in Milwaukee. Yeah,
Wow, because we met in SF, I always feel like you live in SF.
I did live there for a long time when I was at Google Ventures and YouTube, and I visit a lot. So it's I like to pretend I live there now.
Love that. I feel you. To start the show, I want to give a quick shout out to our amazing sponsor. This episode is brought to you by Vervin. If you're a GP or LP looking to simplify capital raising and deployment process, Vervin is here to help. Trusted by over 800 funds and managing more than $2 billion in transaction, Vervin offers a secure, streamlined payment platform designed specifically for capital private capital market. Say goodbye to manual reconciliation and repeated follow-ups. Raise and deploy capital faster and with greater transparency. Ready to make your fund operation smoother? Visit Vervent.com or like actually see the bit.ly link down below. Well, you probably see it can be. Okay, so welcome to the show, John. Okay, so to start the show, I want to give the audience a little bit of your background. I feel like people probably know you by your books print, but now you are a fund manager. And why don't we start with like, how did you started your career? And I feel like personally, when I browsed your resume, my most like I think one of the most important things is like you work for the Onion. That was like my college dream to work there.
Uh,
Maybe we
yes,
start from like, what were the journey there, and then we
sure.
could go into the deep design slash
Yeah,
data
yeah, totally.
thing.
Well, I can get the onion part out of the way really quick because it's kind of disappointing. I was an intern there during college, and I was
But
an
in
intern on the.
that position, you have to fight over so many people for because I personally applied. But
Oh,
keep going.
okay. Well, I was an intern in the web department. So like literally what
Okay,
I did,
got
Grace, is
into
like
what I did.
I
Yeah.
I I am not like I'm not exaggerating. What I did was I like copy and pasted content from the old CMS to like the new CMS. They were like migrating. So like I wasn't writing anything. I wasn't doing anything fun. The best part about it was that I got to read like I mean, I skimmed because I was like supposed to be
Mhm.
getting things done, but I basically got to read like every Onion article ever
Oh,
published,
wow. Yeah.
including like the super old ones that were like not political. They were just, they were like not about
Mhm,
like current events really. They were just sort of like weird made up stories.
mhm.
But yeah, so I did that during college for one semester as an intern. But I've always, well, I'll go all the way back. I grew up in a really small town.
Mhm,
I always liked to make things. I thought I would study engineering, got to university and really hated how it was taught, like all the math, all the, sort of the rote memorization of like formulas and stuff like that.
mhm,
And around that time I found web design. So this was like late
mhm,
90s, early 2000s. I like learned about, it's like, oh, this is so satisfying. Like I can like just me and myself with like without a lot of like a team or like equipment tools or
mhm,
money, like I can make something that then the
mhm,
world has access to.
mhm,
And so that's how I got into design. And I've spent my whole career working with software teams, helping them
mhm,
design and market new products. So I was
mhm,
right after I graduated from college, I worked at a startup in the early 2000s that was
mhm,
acquired by Google. And then I worked on a couple of big projects at Google. I worked on ads and then YouTube. I was
mhm,
actually the first designer for YouTube channels. So when
mhm,
we launched that platform, it launched in 2012. So that was a really cool project to work on. Then
mhm,
I was at Google Ventures for
mhm,
6 years. I was one of
mhm,
the original operating partners there. So I was
mhm,
I was focused on design and go to market, working with our portfolio companies. But I was a full time partner there, member of the team, had carry in the funds, and worked with about 150 of our portfolio companies in the 6 years I was there. So got to work closely with Slack and Uber, One
mhm,
Medical Group, even like Blue Bottle Coffee and some
mhm,
like different kinds of companies. Um, and it was there that we developed the sprint methods, which we can talk about if you want, and wrote the first book, Sprint.
mhm,
But it was this really cool opportunity to sort of like be able to both get the breadth a lot of
mhm,
VCs get, right? Like being able to look
Mhm.
across companies, pattern match across companies, but then also getting the depth that like an operator gets and being able to
Mhm.
go really deep on one project, see like what is actually working, when we talk to customers, when we show product to customers, like how do they actually react?
Mhm.
So I learned a lot during that experience,
Mhm.
and that kind of all of that led to what we're doing now with Character, which is basically like seed investing. So only the parts of the kinds of companies that we like to work with, and then our whole sort of pitch to founders is that we've created these sprint methods that have been used and proven by some of the world's most successful companies, and that
Mhm.
we as firm, as like the founders and the partners at the firm, like we've kind of set everything up so that we can like actually spend time with you, like come and like work hand in hand with you, run these sprints with you together. We're not just going to like give you
Mhm.
some advice, like point you at like a playbook or something, or hand you off to somebody else. Like it is us, like all the way through that cycle of like, you know, getting in touch initially, like learning
Mhm.
about what you're building, making the decision to invest, hopefully earning our allocation, supporting
Mhm.
you after that investment is made. So
Mhm.
really just kind of like streamlining and focusing on the model, on the parts that we love and the parts where we think we can really like, have a big impact for founders.
For sure. Maybe since we are already talking about the sprint method, maybe if you could like give the audience a little bit more about like what is the sprint method, and
Sure.
then we could also talk about the program, which is about to kick off
Oh yeah,
our
totally. Yeah.
applications. Yeah.
Yeah. So when I first joined Google Ventures, I had
Mhm.
been, like I said, I was at, working on YouTube and Google
Mhm.
Ads. And before that, I was at a startup. So I had come from this, first like 10-ish years of my career. I was like sort of a normal like operator. I like would work on one thing for like months at a time or like years at a time, and then like maybe move to a different thing. And when I joined Google Ventures, it was so exciting because it was like, okay, now you get to work on like, well, at first there was only like 50 portfolio companies, but
Mhm.
quickly it was like hundreds of things. Like you're going to
Mhm.
jump from company to company. And when I first was there, I tried to just do that sort of like on the fly, ad hoc.
Mhm.
So I'd go into a company, I'd be like, hey, what's going on here? Like, what do you
Mhm.
need help with? Like, what are your biggest challenges? And work with them. And that worked pretty well. Like first two big projects that I worked on were Retail Me Not, which is a coupon
Mhm.
website, and Foundation Medicine, which is like a genomics test for cancer. So two totally different companies, both really successful though, both IPO'd.
Mhm.
But I had this feeling like from the very beginning that I was like, this method does not scale. Like this method of just like going in one at a time, ad hoc, and being like, hey, let me figure out your unique situation and spend maybe 4 weeks, 6 weeks with you. Like there's no
Mhm.
way that we can scale the team, as quickly as we can deploy capital as a fund. So around that time, Jake Knapp, who's now my co-founder and
Mhm.
partner at Character, he had created this thing at Google called the Design Sprint.
Mhm.
So it was basically like a way to go into a team, help them very quickly, like get going with a new project. And the big idea with the design sprint was to gather the team together and build a realistic prototype in just 5 days that you can put in front of real customers so you can get some early signal on whether you're moving in the right direction, right? So rather
Mhm.
than waiting like months until you have an MVP and you can do a launch, whatever, do
Mhm.
this in like a couple of days. And we knew Jake from just being at Google. And so we actually recruited Jake to join us at Google Ventures. So he joined about a year after me.
Mhm.
And we started running these design sprints with portfolio companies. Like at
Mhm.
first it was just like a couple of them. And then we got to a point where some years we were doing like 20, 30 of these 1 week design sprints with
Mhm.
portfolio companies, always like tweaking the process, improving it. Um, and then years later, when we started Character, we realized that actually there was sort of, when we looked back at the most successful companies that we had worked with
Mhm.
in design sprints, the ones that like were the most successful, they came into that design sprint with a
Mhm.
really clear hypothesis for what the business would be. And then we could use the design sprint to sort of validate that, right? They knew like who their customer was, what problem they were solving, why they were differentiated in the market, what their unique advantages were. And we would, help them test all those assumptions.
Mhm.
But when we started working with teams that were a bit earlier, like pre-seed and seed, they didn't necessarily have all those things figured out. And so we ended up creating a new sprint method called the foundation sprint, that we now use more than the design sprint. It's something we run with all the companies we invest in, a character. And it's basically a 2-day sprint for the very beginning of a big project where you get the team aligned on kind of your fundamental strategy. And then the most important part is you produce what we call a founding hypothesis. So it's this like really crisp statement about what we believe to be true that we can go test with design sprints, with other experiments, with talking to customers, et cetera. So those are kind of the two big like sprint methods, the design sprint, the foundation sprint. We have books about both of them. We use them all the time with the companies that we invest in.
I love that. So like maybe we could walk through a particular company, and then also I feel like systemize the process is like very important too. Like maybe we could talk a little bit more about, like, let's say if today I apply to the program, like how do you guys kind of like process the application, as well as like if I got selected, let's say I'm building an AI agent for writing. I'm just like using an example in case I apply tomorrow. But okay, so I wonder, let's say if I'm building this like AI writing agent, and then like I come to you, be like, hey John, like let's work together on this. Like what would be my process look like? And then how do we design my foundational sprint at like design sprint?
Yeah, totally. So for anybody who
Who's
is
building an AI agent
yeah.
and
If you're
applying
if you're
tomorrow?
listening and you're not quite sure what we're talking about, the program that Grace is referring to, this is Character Labs. This is our 4-week sprint program for founders. It's essentially our accelerator, but it's quite different from other accelerators that are out there. And it's like bringing in guest speakers and having office hours and a lot of like kind of social type of activities. What we're doing in Character Labs is each week we run a sprint with the teams in the program, really with the idea of going through this cycle of like build a prototype, test it with real customers, and do that every single week. So that's the structure, and the purpose of it is to really help founders accelerate their progress toward product market fit. That's why these programs are called accelerators, is they're supposed to accelerate you. And I think oftentimes they focus on accelerating the progress toward fundraising, but not necessarily toward product market fit. And so, as far as we know, Character Labs is the only accelerator that's 100% focused on product market fit. And the founders that we work with, they tell us that they're able to get like 3 to 4 months of progress into 1 month. And then they come out of the program not only with, prototypes and a bunch of validation of their hypotheses and lessons learned, but they also have kind of this new methodology, this new approach for building their companies. So it continues to compound for months and years into the future. But so that's kind of what it is. That's Character Labs. We have an application process. Founders kind of give us a bunch of information. We think that I think writing is kind of an underappreciated skill for founders, the ability to crystallize like what they believe, what they think. So the application, there's a lot of writing. It's, some founders say it's too long, but other founders say, hey, even just the process of going through filling out this application was really helpful for me. We get all the applications, we do a first pass, and we interview a fraction of the applications that came in. So we do a week where we do like between 40 and 50 back-to-back interviews. So it's super like rapid fire, intense, short interviews. But the great thing is we already know so much from reading the applications that we focus those conversations on like really trying to get to know the founders and like understand like their motivation, their passion for working on this opportunity, the relationship with the co-founder. And then from there, we invite a fraction of those founders to join us in the program. And we make an investment. We invest $150,000 in each of those companies. And then they join us for the actual Character Labs, the 4-week sprint program, which kicks off in San Francisco. So the first few days are in San Francisco, and then it switches to in-person. And I can describe sort of an example company if that would be helpful.
Yes, please do.
Not an AI agent, unfortunately, but no, it is a super cool company called Latchet. It's latchet.com. The founders are from Substack. So they were both engineers at Substack, and they worked on the growth features for Substack. So, like recommended newsletters, tools for kind of cross-pollinating between newsletters within the Substack network. These guys built all those features. And they had this insight, or this idea that they could bring that same strategy to the world of e-commerce. Because when you look at e-commerce, particularly for like artisanal, handmade, sort of one-of-one type products, the options for people making those products and selling online are either like Etsy, where you become sort of like one of a million, things that are for sale, or like Shopify, where you can have your own storefront, very beautiful. You can make it look the way you want, but it's really difficult to grow. It's really difficult to get any distribution for your products, because your website is just kind of this like island that sits on its own. And so their idea was like, well, let's basically make Substack, but for independent, sellers for e-commerce. And so that was the idea behind Latchet. So they came into Character Labs. They had that idea, but they didn't really know what the product was going to look like. They didn't know if it was going to be a full stack e-commerce offering, if it was going to be a Shopify plugin. They didn't know how much it was going to be kind of seller focused versus consumer focused. And, they thought this idea was clever, and so did we, but they weren't really sure, like, would that differentiation click with customers? Like, would customers actually care about the things that they cared about, that they thought were important? The other thing that was kind of interesting was the founders are both engineers, right? And so their instinct, they're like, we're starting a company. Great. Like, okay, let's start writing code. That was their instinct. But by slowing down a little bit, they were able to validate their assumptions and try out product ideas much more quickly by running sprints than they would have been able to if they had jumped right into writing code. So that's Latchet. And so the first thing we did with them was a foundation sprint. So start by figuring out, okay, who exactly is the customer? What problem are we really solving for them? And who is the competition? So what are our customers up against? And the way that we do that is basically having each of the teams who are in Character Labs write down sort of their best guesses at what those things are. So creating a rough draft, but getting it down really quickly. This part happens in less than a day. It's part of this idea of building a founding hypothesis, is sort of establishing this is what we think is true. Then the next thing we do is we work with them on differentiation. So starting with, what are our unique advantages? What do we either know or know how to do that others may not? So in the case of Latchet, it was clearly that they're both these like highly capable technical co-founders, so they can build software, and they had worked on this exact same problem in a different domain, right? They had been through this journey with Substack, and they had all these lessons and insights about what worked there that they could bring into the e-commerce realm. And then we worked with them on actually sort of plotting out, okay, like, how are you actually going to beat Etsy? How are you actually going to beat Shopify? Like, Etsy, for example, you're not going to win on the size of the network. Shopify, you're not going to win on, the ecosystem of plugins that are available, or templates that are available, or the customizability of the storefront. So what can you win on? And for them, it was things like they thought they could build a tool that would help these sellers grow their businesses, and that they could build a tool that would be cooperative, not competitive between sellers. And so we help founders sort of tease those out and say, okay, this is what we're building, and this is why we think it's unique. And then the final thing we do during the foundation sprint is help them figure out, what are the different approaches we could take? What are the different versions of the product, kind of the first version that we want to test with customers? Is it a mobile app? Is it a full stack e-commerce solution? Is it a plugin? And decide which one of those they think is the most likely to be successful. We package all those things into this founding hypothesis, which is this simple statement of, if we solve this problem for this customer, they will choose it over these competitors because it is better in these ways. So it's just really super simple, but it's super crisp. it not only aligns the founders, the team, on what they're doing, but most importantly, it sets them up to be able to do the next thing, which in Character Labs is the design sprint, to go and say, okay, let's build a prototype that allows us to test that hypothesis. And by the end of the week, let's go show it to real customers. And literally we go through that hypothesis like a scorecard, like a report card. And we're just like, okay, like check good or X no. Like, does this customer really have this problem? Do they really care about this differentiation? Are they really likely to adopt this solution? And take what they learned from there and then iterate, do it again, do it again, do it again. So 4 weeks later, they had gone from basically having this broad idea, but not knowing exactly what they were going to build, to having a prototype where when they tested it with customers, every single one of those things was a green check mark. They felt they had really validated each of the components of those hypotheses, and they had built conviction, they had built confidence, and they launched basically from there right into the holiday season. Last year, they had an amazing holiday season. And then early this year, they raised a nice seed round based on the traction that they had during the holiday season. And so the whole thing happened much more quickly and with a lot more clarity and intention than I think it would have otherwise. But that's just one example. That's the story of Latch It in Character Labs.
I want to maybe learn more about like when you guys are selecting the company that participate in the program. Like, so for example, you have invested in like, AI companies or like AI meeting assistant or, machine learning for drug developments. So why don't we talk about like when you are picking the sector that you guys invest in, is there kind of like, I'm sure there's like, theme towards it. I guess like what are stuff that you would not be interested in investing in? Because whenever I ask people like, what do you want to invest in? Like people always have like a broad mandate, but like, I guess like, how do you define the things that like after a while, like I think this is like for me too. Like I feel like when I started as like associate somewhere, like, our thing was like consumer tag. And then like, so that's probably everything and anything nowadays. Like, ChatGPT is consumer anyway. So, but like when you really dig deep into it, you find out like there's a lot of things that are not really interest you, or like you feel like it's just never going to be scalable. How do you define this stuff that you are not like interested in?
Well, having a thesis or having themes that you invest in it's interesting because it's partially a marketing exercise, right? It's partially like you are marketing to Ps. You're saying, hey, we're going to raise this fund. These are the companies that we're going to invest in. So that's important. You're also marketing to founders, right? You're also saying you're signaling to founders, we are excited about stuff like this. So if you're building stuff like this, you should talk to us. But you're right that I think, if you are really getting honest with a lot of investors, like they don't want to commit to a thesis because they don't want to filter out an otherwise great founder who doesn't think that they might fit the thesis, right? They want to maintain optionality to meet any founder, to look at anything. And we've sort of been through different permutations of this as well. Like when we first started, we were very much like not thesis driven. We were almost totally sector agnostic. We've always been software only. Like software is our thing. It's all we've ever done. So like, we don't do hardware. We don't do like, we do like software for biotech, but we don't do like actual biotech or like medical devices. So there's a bunch of stuff like that we don't do, software only. But initially we were like very, very broad, with the goal of, sort of letting founders lead us to the really interesting opportunities. And I still think that is substantially true. But for the first time this year, we've started to bring a thesis into view. And it's not about specific sectors, and it's not about enterprise versus consumer. What it's really about is three things. One, who the founders are. We believe that it's still really important, even though AI has made it easier to build things, easier to launch things. We still think it's really important to invest in world-class technical founders, people who are the best in the world at building software products and marketing those. The second thing is that they need to solve really important problems. And I know that sounds vague because,
Mhm.
problems can be important because, they have a big impact on humanity, or because people spend a lot of money on them, or because they
Mhm.
touch people's lives, things that people
Mhm.
use every day. They might not seem important, but if somebody
Mhm.
uses it every day, like it's probably pretty important to them. And then the third component is that that they're basically solving problems that were not previously software addressable.
Mhm.
And this one I think is the most timely and perhaps the most interesting component of this thesis, which is that as the sort of capability curve for software has changed in the last few years, meaning that AI has made it possible to do a lot more things with software than you could do before. It means that now you can build businesses in parts of the economy and in industries that you couldn't do before. And so
Mhm.
that's really the common thread across a lot of our investments. So, looking for something like, or looking at something like Bindwell, which is a recent investment, they're using AI to design precision pesticides. So pesticides that are going to have fewer unintended consequences. They're not going to create as much, pollution or overgrowth, or
Mhm.
unintended um, problems in the environment.
Mhm.
Okay, very interesting as like a product. But
Mhm.
5 years ago, if you had said we want to use software to design precision pesticides, it like wouldn't really have been possible. Like you could have the idea, you could see the market opportunity, but it's the technical capabilities weren't really there. And now
Mhm.
they are there. But it also applies to things that are not as kind of sciencey, not as science
Mhm.
fiction-y. Like you know, we're seed investors in Fathom,
Mhm.
the AI note taker.
Mhm.
And, nowadays there's a lot of AI note takers, but when
Mhm.
Fathom launched, they were one of the very first. And same idea. It was like, okay, you want to build a piece of software that
Mhm.
can record your call, transcribe it, summarize it.
Mhm.
Those things, like only one of those things was really possible when,
Mhm.
when around the time that Fathom started. And so
Mhm.
they were constantly sort of building across this capabilities gap of like, okay, what's
Mhm.
possible today versus what do we think is going to be possible tomorrow? And how is that going to change the product that we can build?
Mhm.
And so that's kind of the common thread is you've got these really exceptional,
Mhm.
technical founders. You've got these important problems. So we're not talking about like, oh, the next CRM or like the next ERP. These are like fundamentally, impactful new things that solve real
Mhm.
problems for people. And then they're in these spaces in the economy that you really couldn't solve, these problems you could not solve with software,
Mhm.
5 or 10 years ago. When those three elements are present, that's where it feels like this is a character company. This is really sort of, on target for us, and where we're more likely to end up making an investment.
How do you think about the competitive landscape? Also, hi, LinkedIn user, will address your question later. So I want to know more about like, so when you're thinking about, for example, you invest in a company called Inductive Bio, and then
Yep.
I feel like nowadays, like using AI to do drug discovery, it's kind of like I literally saw that like on the YC website 7 times. Like, but like, how do you differentiate the different like companies in the same category. Same as, I really like what you said about like when you guys invest in Fandom, that was like the one of only I guess, but like nowadays, like, there's like a lot of different like note taking app,
Yep.
but like how do you think about the competitive landscape when you encounter a company? Obviously, back in time they were like the first, but in the end
Yeah.
of the day, like, nowadays, like in the era of AI, there's like,
Totally.
a lot of different competitive companies in the same space.
Yeah.
Yeah, like how do you diligence like the people or the team or the product later on?
Yeah. Well, for Fathom, it wasn't enough that they were first or one of the
Mhm.
first. We
Mhm.
also needed to believe that they had a sufficiently better product so that the product
Mhm.
quality and experience would be superior.
Mhm.
And probably the most important thing about
Mhm.
Fathom was that they had a differentiated and defensible go-to-market strategy. So
Mhm.
they had done a few things starting from the very, very beginning. They had
Mhm.
done a few things that really gave them an advantage in growth. So
Mhm.
they uh, they learned how to basically take advantage of marketplaces and leaderboards very, very early. So for a long time, they were the top app on the Zoom app marketplace. And so when Zoom launched that marketplace, Fathom benefited from that publicity. They still are one of the top apps, top rated with a perfect five-star rating on G2. So, they were very early to figure out, okay, how do you incentivize customers to write reviews, et cetera. The thing that people now complain about with AI note takers, which is that you have the bots showing up in all the meetings.
Yeah, it's like, yeah.
Fathom was one of the first to do that. And it's actually a huge driver of their growth because people see it there. And especially in, a couple of years ago when they weren't everywhere, you'd see it and you'd be like, oh, what is that? People would ask for permission to record, and that creates a conversation, that creates a discovery opportunity. So a bunch of things like this where we could look at what they were doing and say, this is going to give you a unique advantage in growth. And these things are going to be sticky. It's once you're number one in an app store, it's difficult to be unseated. Once you have a huge installed base, people have a ton of data in your platform, it's more difficult for them to switch, et cetera, et cetera. But differentiation, we think it is the most important and least appreciated aspect of building startups. People talk about differentiation a lot. They think about it. It's a well-known word, but I think when you really look at what companies are building, and if you were to sit down with the founders and say, who do you compete against and how are you differentiated from them? First of all, you would get different answers from all the founders, right? So they wouldn't be aligned on exactly what the strategy is. And then if you plotted them, the sort of differentiation, on the classic, 2x2, like if you sort of plotted, where are we versus the competition, you'd find that most products actually aren't that differentiated, or they're differentiated on things that customers don't really care about. And so, to take the example of Inductive Bio that you brought up, before we even invested in that company, we knew the founders from Flatiron Health. They led the data and ML teams at Flatiron Health, which was one of our biggest investments at Google Ventures. We did a lot of sprints with. And so as they were exploring product ideas before they started the company, I was working with them in sprints. I was coaching them through sprints. And so was able to get not only hear from them, oh, here's how we're going to do something that's differentiated, but here's what we're learning as we test that. So, and I think that's the missing element in a lot of cases is how do you actually see what customers care about? How do you actually see how customers react to, a set of differentiators, to a message, a value proposition, positioning within the market? That's the thing that we try to do in sprints that I think is unique. And so it doesn't mean that we're always right. There's a lot of cases where, both we and the founders believe, oh, this is going to be really important to customers. And then it just isn't. But we try to at least be really clear about those things, really opinionated. And then by running design sprints, by, building prototypes and putting those in front of real customers, we're able to find out really, really fast whether we are in fact right.
I love that. I feel so I wonder from a designing a fund perspective. So obviously you have met some of the current portfolio founders from these top superstar teams from back in time, when you guys worked with them at Google or Google Ventures. So after, let's say since you guys started the fund for a while, how do you kind of I want to say, I guess, how do you keep creating the network that was very strong back then? And since I think a professional VC, you have to really just start, you're always reinventing the sourcing funnel.
Right.
So I guess what are some ways that you find effective to, attract the best deal to continuously to come to Character Capital?
Yeah. I think the most important thing is to be known for something. And it's, there's a lot of things that investors can do to source companies, to, win deals, to be helpful to those founders. But we try to focus on, essentially one thing, which is that
Mhm.
we've created these sprint methods that have been used by some of the world's most successful companies. And if we invest, we'll come in, we'll run these hand in hand with you to help you get to product market fit faster. And so
Mhm.
that shows up in everything that we do. It shows up in outbound. We do a lot of outbound sourcing. So we'll find interesting teams,
Mhm.
interesting people working on interesting problems, and we'll reach out to them. But when we
Mhm.
reach out, it's not, hey, I'm a VC and I'd like to meet you and invest in your company. It's, hey, I wrote these books, I created these sprint methods, would love to chat and learn more about what you're doing. Sometimes those first conversations are not even about investing, right? They're just about talking about product or talking about go to market. We also, just like all investors, the relationships that we have with founders and the referrals we get from the founders that we've already invested in are really, really important.
Mhm.
One thing that we think is a little bit unique for us is that the relationships we have with founders in our portfolio are, in many cases, they're a bit deeper than in the typical sort of investor founder relationship, because
Mhm.
you think about the design sprints that we've run, going back to the example of like Inductive Bio, the founders, they came
Mhm.
from Flatiron Health. Like, we weren't just like, in board meetings with Flatiron Health or like having a monthly check-in call. Like, when we were running design sprints with them, we'd be like, we'd fly to New York, we'd be in their office literally for like an entire week, like all day, every day for a week. We'd be like working together, eating together, like, so the relationships that we have, like, at this point, we've worked with over
Mhm.
300 companies. It's like 300 companies times, I don't know, 5 people in each of those rooms. And then that's 1,500 like really strong founder relationships. And then when those people leave and they start a company, or when they refer us to somebody else,
Mhm.
that relationship is super strong, unusually strong, I
Mhm.
think. And then of course, with the books, and just with some of the other like content
Mhm.
that we've created and resources that
Mhm.
we've created, inbound is actually a really important source for us.
Mhm.
And so, to that end, we sort of think of that as our own product. And we think about differentiation, we
Mhm.
think about what can we prototype, what can we test, and measure and see how it's performing. And so we continue to create new opportunities for founders to find us and founders to get to know us. So for example, at the end of this month, we have our next founder masterclass in San Francisco.
Mhm.
We do this event series called Character Foundations. It's one day, it's 50 founders. And during the day, we go through a bunch of the techniques that we use, a bunch of the sprint methods that we use to help teams find product market fit. It's very small and off the record. So we kind of have really sort of, intimate conversations about like, what does it actually take to build a company that is, is differentiated, that can cut through the
Mhm.
noise, a product that actually matters to customers. And so, founders can, if we meet them somehow, if they, see us on a podcast, or, maybe they're watching this and, they
Mhm.
look me up, that creates an opportunity for them without raising money, without having to pay anything, without having to do anything except for like fill out a short application, and spend the time to come and hang out with us for a day. That provides an opportunity for hopefully them to get a lot of value
Mhm.
with no strings attached, but also for us to get to know each other. And so many of the people that participate in those events, they end up in Character Labs. We end up making, a core investment in their seed round, or they just end up being somebody that we have a relationship with where, down the line, maybe they'll start another company, maybe they'll refer us to a founder that they know. So in some ways, it's just kind of like a big funnel where we're just trying to create differentiated touch points for founders to find us, for us to find founders, for us to get to know each other. And then
Mhm.
when we do want to make an investment, to have a differentiated pitch that's based on something that is very, very unique to us, that's difficult for others to replicate.
For sure. I wonder, so like when you guys were writing the book, I think like before, like tell me more about like when, since you guys are like, two-time best-selling authors. So how do you think about like designing the book, and who was the person that you had in mind as like the core audience like back
Yeah.
then?
Yeah. So the audience for Sprint and Click is the same. It's founders.
Mhm.
And so, we sort of define founder as like, as inclusive of,
Oh,
like the,
yeah. I had this since like a while ago. I already listened to it when it was like on my like 3 phone generation ago. But yeah.
that is awesome. It's amazing. It's like some of those founders are like, yeah, they're route raising venture capital,
Mhm.
they're engineers, whatever. But
Mhm.
we also think of, when we say it's for founders, we're also thinking of like somebody who maybe is inside a big company who's trying to
Mhm.
kick off a new initiative,
Mhm.
somebody who's launching a nonprofit, or they're launching
Mhm.
a small business that's not going to raise venture capital, but they still have the same challenges, which is like, they have finite time and finite resources and
Mhm.
energy, and they want to do something that is going to be like worthwhile and effective
Mhm.
and successful in the world, and they
Mhm.
want to spend their time well as they pursue
Mhm.
that opportunity. So that was
Mhm.
really the audience for both Sprint and Click. And then when it came time to like the design of the book,
Mhm.
both books are very, very similar. So like they both contain, so this is our newest book, Click. So like
Mhm.
they contain like a lot of illustrations and like handwritten, like here's,
Mhm.
talking about differentiation and
Mhm.
showing like examples of 2x2s. They contain like really specific advice. So like if I pull up, I think this is a good example. I was just reviewing with a founder the other day. Oh yeah. So like this is the section about identifying your competition. We have like really concrete, like, start with direct competitors. So these are like the companies doing the same thing that people have heard
Mhm.
of. Then search for substitutes. Look for like, okay, how do people solve this problem today? Even if there is no direct competitor. Be cognizant that you might be competing against nothing. There may
Mhm.
not be any solution for this problem, but
Mhm.
also like that's kind of a red flag if
Mhm.
customers haven't found a way to solve this problem already with
Mhm.
like a workaround or a substitution. That might be a sign that the problem isn't that important to them, right? It's not
Mhm.
worth solving. So those are sort of, tactical guidelines for how to identify competition,
Mhm.
and then go for the 800-pound gorilla. Like
Mhm.
realistically, when you are going into a new market and you're competing with a
Mhm.
product, you're not competing against the other startups,
Mhm.
like you are
Mhm.
competing against probably an incumbent, probably
Mhm.
an existing way of doing something. And so whatever that first name is, when you talk to somebody, a customer, and you're like, hey, how do you solve X? And they're like, oh yeah, well, we just, we use Excel. We just have a bunch of, models we've built in Excel. Like usually your competition is some big, we call it the 800-pound gorilla. Usually it's some
Mhm.
big established solution like that. So that's just, example of how we just try to make the book like both fun to read, easy to read, fast, but also super, super tactical, so that somebody can get the book, they can go through it on their own and actually run these sprints,
Mhm.
without needing us, without needing like to hire, an expensive consultant or facilitator or
Mhm.
something like that.
I have a question on
Yeah.
this. So I think it's like, oh, before this like after this we'll jump into the like LP category because I thought you guys have like really great LPs like or individual LPs. So
Yeah.
maybe we could start with like designing the book itself. So like I think one of the thing I personally as someone I like wrote my own books and then like I my thing was a lot of based off like my interview with other people. So it's like other people's experience and then I package them into like something. But I think for as for your book, I feel like a lot of it's like hands on your experience and then
Yep.
your expertise. How do you like I guess like maybe can you walk us through the process of like actually writing a book to like funnel the idea from your head into paper? Because a lot of times I'm like, oh, I want to write a book, but like what am I supposed to
Yeah.
write about, right? So like I have like a generic idea on like XYZ, but like would people
Yeah.
actually want to hear from me about my idea on something, right? So like I guess like how do you think about that? Like when it's
Yeah.
like the mental part of it, and then when it's like on like the tactical part of like actually writing a book.
Yeah. So the yeah, I don't want to pretend that like this is the perfect process and that this is how everybody writes books, but the way that we write books
Mhm,
is that, um, we always start with some set of really small things that we can write
mhm,
or create first. So
mhm,
like with Sprint,
mhm,
we had been running sprints for several years, so the method itself was pretty locked in. But long before we even thought about writing a book, we started publishing blog posts that were just about like how to do parts of the design sprint. And so those served a couple of functions. One, they allowed us to validate like the interest and the market for a potential book. Again, we weren't thinking about writing a book, but like part of why we did end up writing a book was we put these blog posts out and they were super popular. People were like, you know, finding them, and they would like email us with questions. And we're like, oh, interesting. Like people are fascinated by this topic. But the other thing was it allowed us to get started. It like, if you just sit down and you're like, okay, today I start writing my book, like it's incredibly daunting. It's you know, not to mention like the question of will it be any good? Like just the question of can I start and keep going is like very, very challenging. So by creating something small first, you can test the idea and you can also start to build some momentum. You can kind of build your own comfort, your own confidence, conviction, and like, what does it feel like to write about this? Writing is like a thought process, you know, like when you actually sit down to write something, you have to think about what you're trying to say and what is the best way to say it. Click was a little bit different. We didn't write anything publicly about it per se, but we had written a lot around it. For example, we had written this guide to the brand sprint, which is a 3-hour sprint method. That's kind of a subset of the foundation sprint, which is in Click. We had created a ton of resources that we use with portfolio companies. So we run a lot of our sprints on Miro. So like the virtual whiteboard app. So we had created like templates for like Miro templates. So we had started to make these smaller things. Again, we knew that they were interesting to people. We knew that they worked, but also we had already started to organize our thoughts. And so you're kind of basically building up. You're starting with these little building blocks, and then you're like going to the next level and the next level and the next level. And like eventually you're kind of building up to the point where, you know, it's book scale. You know, you have a whole outline of the book. You have like, you know, you start to fill in the gaps. But then, you know, you do get to a point where it's just like months of just like writing every single day, you know, like spending hours a day just writing, you know, revising, getting feedback, getting stuck, having to start again. Like that part of the process is definitely unavoidable. And it's very important, but I think it goes a lot better if you start by kind of creating these little building blocks and you build from there.
I wonder, so like one other thing is like, how do you bake into the promotion part to it as well? Because I think become a best-selling author is not like as easy as it is to like, you know, let's just drop something into the world. It's almost the opposite. I feel like a lot of times like you have to like promote it first and then you write stuff that people are interested about. Like how do you kind of like design the go-to-market strategy for your own books?
Well, it's funny. I was talking about this with some of our founders recently, not about books, but about them like coming out of stealth or like announcing their companies. And, you know, I think the sort of secret of all of this stuff is that like virality is never like organic. I mean,
it's never
like maybe one out of
today's age, like never. Sorry.
And so like maybe 1 out of 1 million times, like something truly just catches fire. But usually if there is, you know, if something does become organically viral, it started out as like manufactured virality. And a lot of the things that we think are organic virality are actually manufactured. So concretely what that means is like anytime you're launching anything, including a book, you need to start by figuring out who are the people who are going to help you talk about it. So, you know, we had a list of hundreds and hundreds of people, everybody from, you know, the folks who ended up, you know, writing blurbs for the book, for example, like Reid Hoffman, you know, Katie Dill, who's the head of design at Stripe, people like that, who are like very influential, very, very well known, but all the way to like, you know, folks that we've worked with over the years that we called micro influencers, who are like, oh, they have 5,000 LinkedIn followers. And when they post about design, they get a really good reaction. A good example of this is Elizabeth Laraki, who we both worked with at Google. She's a design partner at Electric Capital. She, you know, she's not a household name, but she has a bunch of followers on LinkedIn. She writes amazing posts about design. And so somebody like that, we're like, okay, great. If we can send a book to Elizabeth, we can get her excited. If she likes it, if she posts about it, like that's going to be great. So that's the start of it. And I tell that to founders too, when they're like coming out of stealth, is like, build a list of like a couple hundred people who are going to be psyched about what you're doing and like reach out to them. And then it's just about like coordinating the sort of push. So, you know, when the, in the case of a book, you know, there's really two dates that matter. There's, when you sort of announce the book and open up pre-orders, and then there's the day that the book comes out. And so just sort of creating, again, you know, coordinated campaigns to talk to those people and sort of ask for their help, but also like creating things for them to share, right? Like, you know, you don't want to just keep asking them over and over, hey, post about my book, post about my book. But if you can create something new, like a new resource, a new blog post, a new event, that creates fresh opportunities for those people to talk about what you're doing. And so, you know, that's kind of what has worked for us, is just that simple approach.
I love that. I feel like when I was like writing my own books, I was like reading, there's like a PDF that by I think Ryan Holiday and some other viral writer and Tim Ferriss or something. Like they have like a secret PDF of like bookstrapper's guide or something
Oh,
to from books.
interesting.
Yeah,
Yeah.
yeah. It was like I think it's like some other peer author sent it to me and then like just like basically help you like think about how people actually like exactly like what you said about like, you know, sometimes like the micro influencer may like work better
Yeah.
than like, you know, you just like generically post about it somewhere. So thinking about like the go-to-market strategy as well as like thinking about just like designing the campaign is like
Yeah,
really important.
totally.
Uh,
Yeah. And you know, another element of launching Click, which we just did a few months ago. So this is all top of
right.
mind for me.
Yeah.
Like,
Everyone buy the book. Yeah.
like we didn't really try to like get into like mainstream media. Like, you know, sure,
Mhm.
would have been great if like, you know, the New York Times business section
Yeah.
wrote about it, but like that wasn't
Mhm.
our focus. Like our focus was like, you know, we spoke at OpenAI, like we
Yeah.
spoke at Anthropic, like
Mhm.
you know, we were on Lenny's podcast. Like the focus was on those opportunities that are super, super targeted to the audience
Mhm.
that we really care about, and really focusing on trying to sort of create a compelling opportunity for them,
Mhm.
versus like try to go to the biggest, you know, names or the biggest
Mhm.
audiences that we could think of.
Any like kind of like tips for people who are also trying to target like a niche audience? Like also like the audience that you're talking about is like very high caliber, right? You have to know the right people to get in like OpenAI or Anthropic. Like if a regular person trying to recreate that kind of uh strategy, like what would you say would be your advice for them? They probably don't have to be, they try to get an OpenAI, but like in their category of things that are actually matter to them.
Yeah, there's like two things that come to mind. One is knowing where those people hang out, like
Mhm.
both online and offline. Um,
Mhm.
and you know, sometimes it's social media, sometimes it's, you know, there might be Reddit, it might be, you
Mhm.
know, there's kind of a scene, you know, for a lot of different communities, again, both online and offline. And then
Mhm.
the second component is like making things that are valuable. So, you
Mhm.
know, like uh, Brad Feld just came out with his latest book,
Yeah, yeah, yeah.
called Give First, you know, and it's
Mhm.
this great sort of mindset of
Mhm.
start by creating value in the world, and and sort of believe that you will ultimately be more successful if you start there than if you know, try to like enter these transactions and, you know, and only provide value when somebody has agreed to give you value back.
Mhm.
So, you know, whether it's offering to, you know, do a free event or free speaking gig, whether it's a resource or a guide, whether it's, you know, maybe you're offering to do, you know, personal reviews of
Mhm.
things, to do work for free, like maybe you're building, you know, a product, maybe you're building an app that is going to, you know, solve a problem for people, like you know, creating something that is actually valuable first, giving first, and then
Mhm.
being able to promote it within those communities that contain the people that you care about. Like to me, that's kind of the essential like 1-2.
Mm, for sure. I want to be mindful of the time. Maybe we do one real question and then one audience question.
Sure.
Okay. So one last question I want to cover is like obviously you guys have like a really impressive group of LPs, like such as people from companies like YouTube, Google, Square, Uber. Why don't we talk about like I think knowing some of the people is like like it's not like very hard because like if you live in Silicon Valley, I'm sure you will know some people, but to convert them into LPs, I feel like that takes a different set of convincing. So like how do you think about attracting these like operational experts to be LPs?
Yeah. Yeah. So we've raised 2 funds.
Mhm.
The first fund we
Oh,
raised in
congrats on the new fund, by the way. Yeah.
Thanks. Yeah. Yeah. We raised our second fund last year. It's
Mhm.
52 million.
Mhm.
And the first fund, yeah, like you said, was a lot of individual LPs, some
Mhm.
family offices, but not really like no institutional investors.
Mhm.
They're basically like the people, the institutional LPs who invest in new funds are very few and far between.
Mhm.
They are known who they are,
Mhm.
like they're people who like that's what they do.
Mhm.
But the sort of the odds of having them as an LP in a first time fund are just ridiculously low.
Mhm.
It's far more common for a new VC fund to have individual LPs. um, a couple of things that I think were helpful for us there were, um, one, recognizing that it's essentially an enterprise sale. Like,
Mhm.
almost nobody's going to agree to invest in a VC fund after like one call. Usually like it takes a while. Um, in that category, when it comes to individuals, like very few people are actively looking for VC funds to invest in,
Mhm.
right? Like if you're an institutional LP, you have an allocation target, you say, hey, we need to be, 50% of our portfolio needs to be in privates. And of that, like 30% needs to be VC. So like part of their job is like going and looking for VC funds that they can invest in to sort of fill that allocation bucket. But
Mhm.
most individuals, unless they're extremely wealthy, they have, family office staff or whatever, like they're not looking for VC funds to invest in. So you can't come at it from this perspective of like, I'm selling you a VC fund. I think
Mhm.
you have to step way back into like the story of why you're doing it, really understand what that person cares about and try to tailor the story and the pitch to the things that matter to them. And then finally, like, I think just remembering that, um, you know, with fundraising, and I think it's true in a
Mhm.
lot of things in life, like it ultimately just comes down to like people in making agreements with other people that they like, just like, you know, e- even in the institutional setting, I think like ultimately it's about a person choosing to believe in another person and choosing to support them.
Mhm.
And so, you know, not being overly transactional about it, not not assuming that they're going to be interested,
Mhm.
before you're really sure that they are. Um, those things like helped us.
Mhm.
But it, like you said, it sort of starts from who do you already know, and then actually the final thing I would say is like, um, a lot of individual LPs in particular, once they agree to invest in something, they are very excited to share that with other people that they know,
Mhm.
because it feels, I think, like a little bit of a secret. It's this thing that like isn't well known, and it's cool. And
Yes.
they felt, strongly enough that they wanted to risk their own capital on it. And so you can start to leverage, when one person commits, you can ask them for intros. They'll often share to others. And so we ended up, a bunch of our LPs in the first fund are people that I worked with at YouTube. And it was like one person in particular that committed first and then shared it with a ton of other people. And we ended up with this really nice little group of ex YouTube LPs. But it started with that one person who then was excited to share.
Mhm. Can I ask like another question? And then I don't know if you have time,
Yeah.
but we'll
Yeah.
try to
Yeah.
wrap soon. So like another question is like, how do you kind of like work with a co-founder? Because I think that's another part. It's like obviously you guys have worked together. That's like kind of like co-founding a company together too.
Right.
So like, um, how do you like distribute the work, right? Like, so it's not
Mm,
like one person take care of race and then one person take care of
right.
like other stuff, or like how do you kind of like distribute the work and like work together because I feel like this is like a 10-year project. It's like, it's not like I can just quit my job
Yeah,
tomorrow.
totally.
Like I'm done. Yeah.
Well, I think there's different approaches. Like I think that there's historically VC firms have been partnerships, and
Mhm.
legally, they're partnerships, but like I think there's this notion of a partnership, which is sort of like you know, we like partners at a law firm, it's like
Mhm.
they might be collaborative, but like the end of the day, they're all kind of responsible for their own things. They all get
Yeah,
paid
yeah.
based on like what they do, et cetera. And I think that's kind of the, more traditional model for VC. The approach that we took was like that we're a team, and
Mhm.
so like you said, it's not like we're super rigid about like who does what. Um, that said, I think it is helpful to have clarity about who is responsible for which areas of the business. And I have two co-founders. They're both really exceptional people. So Jake Knapp, who I mentioned,
Mhm.
and Jake is also a designer. He had also worked at Google. We met at Google Ventures. We
Mhm.
ran a lot of sprints together there. We wrote the books together. And then we have a third co-founder named Eli Blee Goldman, who I met more recently in 2019. And he had previously been an investor for a family office that started to take on outside money. So he had, literally from being an intern, grabbing coffee up through eventually becoming a general partner in that fund where they took on outside money. Like he had just really seen it and done it all in VC. And so, having kind of for us, having like more a mix of skills and experiences like you would see on a team versus having like three clones, and like
Mhm.
you might have in a more traditional partnership model, like
Mhm.
that was really important. And then, the other thing was just like putting in the effort early to build trust and build like alignment and clarity about everybody else.
Mhm.
So like Eli and I, we only met in 2019, I think we met.
Mhm.
And we decided to start character in 2020, and we didn't raise our first fund until 2021. But we spent so much time together. It wasn't like we had been working together for years. We were sort of, new friends, and then ultimately business partners. But we spent a lot of time together talking through all kinds of different scenarios and details. Really, partially it was functional to try to just like plan what we were going to do with the firm, but it was also
Mhm.
about like really getting to know each other and understand like, what is, what is the character of this person, pun intended, like what is this person really like and how do they react in certain circumstances? Because I
Mhm.
think, whether it's a startup or whether it's a VC firm, like, more of them fail because of like co-founder issues than probably almost anything else. And so particularly when you're making such a long-term commitment, we just wanted to be really confident that like the strength of the relationship was going to persist.
I love that. Well, I wanna be mindful of the time. I don't know, do you have, like, 1 minute for a
Yeah,
question
let's
from
do
the
it.
audience?
Yeah.
Okay,
Yep.
one audience question and the 30-second fun round. Okay, so this audience is asking, "Is going through a accelerated process a must for if a character capital, the founder know how to launch and run the business, have been doing the stuff for, like, 30 years?" It's like and then I don't know if you wanna, okay, I think it's the same question.
Oh,
But is
okay.
it like running a bank or mutual funds? I'm not sure what that means.
Yeah, that part I'm not sure about either.
Okay. I think
Um,
maybe just do the first question.
yeah.
Yeah.
Yeah. So our primary offering to founders is
Mhm.
character labs. So,
Mhm.
like all else being equal, a founder comes to us and they're like, "Hey, we're interested in working together." That's kind of our
Mhm.
preferred starting point. We think that
Mhm.
it's the provided that that company doesn't already have a ton of traction, they don't have,
Mhm.
product in the market, they haven't raised a lot of money. Like we think that the activities that we do together in those first 4 weeks, that's kind of like our magic wand, right? Like if
Mhm.
we could take any team and say, here's what you should do to get started. Like it's that. It's run a foundation sprint and it's run a series of design sprints to validate your founding hypothesis.
Mhm.
Um, but we do lead and participate in a select number of seed rounds.
Mhm.
We don't invest after seed.
Mhm.
We're very small fund, super focused on pre-seed and seed. But we
Mhm.
do, there are here and there, exceptional cases where we invest without, in companies that don't go through character labs first.
Got it. Okay, so just do it, basically. Okay. What's your favorite book?
Oh, my favorite book. Oh my
Mhm,
gosh, I don't know if I have one favorite. I'm gonna look on my shelf because it's right here. There's a book that I really love that is not well known, which is why I'm going to mention it. It's
mhm,
called Wrapped, R-A-P-T,
mm.
and it is all about how what we pay attention to essentially creates our reality. So, like, our
Ah,
reality is not just the circumstances that we're in, but it's
mhm.
what we choose to pay attention to.
Wow.
And that affects, things like, our health and our relationships, but it also affects like the media that we consume. Like if you pay attention to a lot
Mhm.
of really like, negative or cynical messages all the time, like that becomes your reality versus if you pay attention to like, more sort of optimistic or like expansive types of things, like that
Yeah.
becomes your reality. So fascinating book. I read it like
Wow.
probably 20 years ago and loved it.
Wow, I'm gonna buy it immediately. Okay, so who made the biggest impact in your career?
Probably the single biggest impact was from Matt Shobe. Um,
Mhm,
so when I graduated from college, I had been running a web design business in
mhm,
college, and so I was like, I thought most of the jobs I applied for were like sort of marketing, brand design, working in agencies. And I didn't get any of those jobs,
mhm,
but I also applied for a startup. I applied for
mhm,
a job at a startup, and that company had four founders actually.
mhm.
One of the founders is really famous. His name is Dick Costello. He became the
Oh,
CEO of
right.
Twitter. But he was one of the founders of the startup that I worked for.
Mhm,
But one of his other founders was this guy named Matt Shobe. And Matt, there was something in my portfolio, my application that caught his eye. He took a chance on me. I was literally 22 years old. Didn't know anything, had never worked in like a technology company. And he gave me a job. I was like the I don't know, third or fourth employee at that company. And he's been a big supporter, friend. He's an LP.
mhm.
So yeah, shout out to Matt Shobe.
Love that. Who would you invite to your dinner party?
Oh, I really like, when I hear a question like that, I think about like writers, like
Mhm,
whose writing do I enjoy that I would like to have to be able to talk to. And two that come to mind are Derek Thompson.
mhm,
He used to write for The Atlantic and he just left to start a Substack. And he's also the co-author of Abundance with Ezra Klein. And then Matt Levine, who writes Money Stuff
oh,
for
yeah.
Bloomberg.
Yeah.
I read both of those guys, like everything they write. So I think that'd be fun.
Wow. I love that. I like that, like, you actually read stuff. I feel like, it's a rare quality these days. Um, where can we find you outside of work?
um, doing two things. One is just walking around Milwaukee. I love to walk, and I
Mhm,
live in Milwaukee. So walking to me is just like if I'm low energy, walking gives me energy.
mhm,
If I'm worked up, walking settles me down. It's just like this great thing. So I'm often just kind of in the neighborhood. But my major hobby outside of work is sailing. So
mhm.
I've done a lot of sailing in my life and do some here, but you'll often find me on a boat somewhere.
Love that. Well, John, thank you so much for coming on the show today. It was
Yeah,
such a
thanks,
fun
Grace.
conversation.
Yeah, it was my pleasure. Thanks for all your great questions.
Awesome. Let me quickly end stream.